Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee. Joining me is my co-host, CoinDesk contributor, Lawrence Lewitton. Happy New Year, Lawrence.
Happy New Year.
Let's see if 2023 gets any better than 2022. Let's check in on Bitcoin right now. The CoinDesk Bitcoin price, XVX index currently at $16,721. Bitcoin is pretty flat, about 18 basis points up over the past 24 hours. CoinDesk Ether price, ETX index, 12.16 right now, also 14 basis points up, trading pretty flat. And the DFX, CoinDesk's DeFi index at 100, up about 0.3%. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. So one story we're tracking this morning that has the crypto world abuzz, Lawrence, is this Gemini and DCG feud. So Gemini co-founder Cameron Winklevoss is accusing DCG's digital currency group's Barry Silbert of bad faith stalling in $900 million worth of locked funds. And Silbert is responding, saying his firm submitted a proposal to Genesis and Gemini's advisors last Thursday. And we should all note, folks, DCG is a parent company of CoinDesk. And this is not really having a market-moving impact right now, but it is stirring the waters, is it not, Lawrence?
Yeah, I mean, the accusations are pretty strong. The Winklevoss brothers are saying that basically they're owed $900 million are owed to earn customers, but that DCG had taken about 1.6, close to $1.7 billion out of Genesis to fund other things, like, according to the Winklevoss brothers, the share buybacks, other ventures at DCG, for instance. I think they're hinting at Grayscale, probably not CoinDesk, or who knows. But yeah, as we mentioned, it is what it is. But they're saying, look, they're saying to Barry Silbert, you took the money out of Genesis, put it back, because Gemini customers, etc. That's our money. That they listed school teachers and all these investors who had put money in to the Earn program. But dads giving their kids' bar mitzvah money over to do this, to earn some money for their kids, and they're saying, hey, you know what? This is not working. You owe it to us. You take it out of those companies you put in. And I've heard, again, in the debt markets, this has been something that's been going around for a while. People not being willing to help out DCG allegedly because of that. So, that sort of accusation has been floating around for some time. So, anyway, yeah, that's something that
spurring all sorts
could have
of
an
conspiracy
effect.
theories as well. And so far, though, as I mentioned, not having a market's impact. It's just talk for now. But what could happen with the markets, Lawrence?
Well, that's a good question. That's something that maybe we should perhaps talk to our next guest. So joining us now actually to talk about it is Bilal Little. He's president of DFD Partners, a distribution platform provider for asset managers. Welcome back, Bilal.
Hey, how you doing? Happy New Year to you.
Happy New Year to you. So, of course, we're seeing this controversy between Genesis and Gemini, really DCG and the Barry Silbert and the Winklevoss brothers, play out into the public. For the time being, markets are trading flat. But does this have an impact given the role of DCG and other ventures such as Grayscale, such as what happens if things go wrong with DCG?
Yeah, look, I think right now this is a headline, not a headwind for the markets, right? So that's why you're not seeing much movement here. Again, this is the issue and the problem when it comes to centralization as well as lack of accountability due to the lack of regulatory clarity that we still don't have in the marketplace. Unfortunately, this is a bit of a shouting match and pointing of the fingers, somewhat of an industry. I'll call it soap opera. It's unfortunate that it has to happen because it's playing out on Twitter when we have these two very important companies, I'll call it three very important companies entangled and sort of a bit of a debt-based scandal. And unfortunately, this is the challenge. You got 340,000 investors that are impacted with over $900 million worth of investments, right? So there's an issue here, but I don't think it's going to be a headwind for the marketplace at all. Again, it's just a headline today.
Yeah, and to be sure, they're seeking arbitration, which is a little bit different than going to court. They're trying to get this done as quickly as possible. I guess it seems as if everybody recognizes that if this drags out too long or if it becomes a legal proceeding, it actually might have a negative impact on crypto, correct?
Yeah, look, it could, but at the end of the day, I think the crypto market is actually trying to find some footing and look to the industry for some positive news. I think this still stems off the back of the issue with FTX as far as liquidity goes, right, and accountability. I think those two go hand in hand, especially when you're dealing with any type of debt and investor lockup periods. But what's happening right now, and I think this is what we should be paying attention to, is look, we're coming off a period in time when the market had to flush itself, and essentially that's what you saw in 2022, and you'll still see some of that in 2023 in the first half. But quickly, you'll see the market turn towards I'd say a positive sign, and that's going to be the Bitcoin halving in 2024.
Is there a sense that there could be further crypto contagion ahead, or have we reached a bottom?
Personally, I don't believe we reached the bottom. I still believe that there'll probably be one or two more big headline issues that will drop and that will cause some continued impact on the marketplace. But after that, I think once we hit somewhere in between, I don't want to call any prices, but call it 12 to 13,000 or so, we should have a pretty good flush of the system, and you'll see opportunities as people continue to build.
And how are the institutional and retail investors differing in their outlook here? Obviously with the new year, what people always think about, okay, what do you expect the next 12 months to look like? I wouldn't have asked, I think most people wouldn't have expected we'd be in this spot one way or another 12 months ago. But 12 months from now, what are the expectations, I should say? What are the expectations that we know of so far between the institutional and retail investors?
Yeah, look, to be honest, you could just probably check Google Trends and you can see that crypto is not trending pretty high anymore right now from a retail perspective. But I think retail, right, that's always a fleeting trend. I would never pay attention to that. I would always pay attention to what the institutional folks continue to do. And at the end of the day, they're still building. They're still utilizing this as an opportunity. And I think you'll also continue to see some big help from the political arena as well. When you start looking globally at what's taking place, you're looking at a country like, Fiji, looking at making Bitcoin legal tender. You look at Canada, right? They're still thinking about and trying to find ways to accept Bitcoin as payment. You look at, the new senator of Ohio, right? He's known as he's a venture capitalist, but also holds over $250,000 in Bitcoin and crypto assets. So I think you're going to continue to see support for the space. And I do believe sometime at the end of Q1 going into Q2, when the Fed does pivot, that you'll see a nice move to the upside, both in equity markets as well as crypto. I think this is a fantastic opportunity to continue to build your position as prices have been suppressed.
You said when the Fed does pivot, you're not saying if the Fed pivots.
It's definitely a win. It's a math problem. They can't continue to raise rates to where they are right now, right? It's not actually a Fed-driven issue that we have right now. We have a supply-demand issue, and right now there's a supply constraint that's really fueling inflation, and that's going to lead to both macro and market volatility. But what you're going to see is the Fed is going to use the only utility that they have, which is raising rates, to try to slow down inflation and to continue to tame it. And we already start to see that inflation's rolling over today.
Right, but nonetheless, I mean, this perhaps the Fed will at least slow down on its tightening, but
sure.
that doesn't necessarily translate to the go-go years of the pandemic when the Fed couldn't keep its printers running fast enough and they were like dumping dollars at like everyone's doorstep. It's not going to look, I assume you don't expect it to look like it did 2 years ago, 2.5 years ago when that happened. And so does that, between that and also what happened with FTX, do you think that while there might be continued institutional interest in crypto, do you think that at least some of it got dampened between those two events? In other words, that we're going to see this kind of, no matter what, we're not going to see the kind of craziness that we saw back in the past. And also we're not going to see interest in crypto, given that they've proven they don't know how to do due diligence to save their lives.
That's putting it politely. No, well, let me just take the second part of it. Yeah, let me take the second part of the question first. So the institutions will continue to build because the technology and the utility of it is better than what we have today. So no, I don't believe that stops. That only continues to accelerate. Now, what needs to accelerate also is, and this is what I continue to say, is the regulatory clarity that we need. And they're just trying to play catch up right now, and they can't continue to lose that position. So they need to get on one accord, get some rules of the road for us to continue to invest in, right? Call it a spade, a security, and let's move forward. And I think the industry would embrace that and continue to be excited about the opportunities of this technology. So that's one. The other thing that you brought up is an interesting point as far as you can't use the same old playbook going forward in 2023 and going forward, right? So the old adage of buying the dip and just hoping that things work out and play and continue to move forward is great. That's not going to be the case. You actually need to constantly evaluate and consistently, I would say, check the temperature of the marketplace. And we're looking at a market today that is focused purely on data. And the data is not a big tailwind today, but at one point it will move to becoming a tailwind and less volatility. And again, I think that's going to happen at the back half of 2023.
I want to pull at a string you mentioned earlier in the interview, which is that crypto hasn't seen a bottom. So what would be the catalyst to bring it a leg lower? Would it be the problems at Genesis? They've halted withdrawals. Their two biggest clients were FTX and Three Arrows Capital. They both collapsed. Could it be GBTC, Grayscale? We're seeing record high discount on GBTC. That's usually an indicator of what institutional investors are thinking about in terms of crypto, and seeing it as an all-time low is a pretty bad sign. And of course, both these companies and CoinDesk are owned under the DCG umbrella. So do you see points of weakness there? And if so, which one is the weaker link?
Yeah, look, I don't think it's actually going to be based off of what the information that we know is today. And that we know that right there's issues around liquidity and both accountability there. But I think, you're going to start to see either bankruptcy and or fire sales within the mining space. I think that's going to be a positive sign for the marketplace, especially as you continue to see consolidation there right towards the back end of the year. I don't know why the headlines weren't as big, but there were several smaller and mid-sized miners that were talking about financial issues that you can point to. And I think that's going to be a positive sign. At the end of the day, I believe that, there's going to be more confidence coming to market when the market starts to realize that there's, again, a supply-based issue when it comes to the amount of Bitcoin that are out there, and investors are going to start to pile back in when they feel that the price is probably much more indicative of what the fair market value is.
Yep. All right. Well, we have seen Compute North, a miner, go bankrupt. Bitcoin miner Core Scientific just got a $17 million loan from Grayscale, so they're restructuring, but continuing to monitor that space. Bilal, we'll end it there. Thanks so much. That was DFD Partners President Bilal Little.
Thank you, guys. Have a good.
All right, coming up, Sam Bankman-Fried, the disgraced founder of FTX, will be arraigned this afternoon in New York. We'll discuss after the break.
The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
Former FTX CEO Sam Bankman-Fried is likely to plead not guilty at his arraignment this afternoon in Manhattan court, according to the Wall Street Journal. Joining us to discuss is CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Happy New Year, Nick. All right. What's expected to happen in court today for Sam?
Hey, good morning and Happy New Year. As you said, Sam Bankman-Fried is expected to plead not guilty to the 8 different charges he's been accused of. They range from conspiracy to commit wire fraud to campaign finance violations to securities and commodities fraud allegations. So, I think today what we're going to hear is a little bit more detail from the prosecutors as to, just what exactly they're accusing him of. And, of course, we're going to hear from Sam Bankman-Fried's attorneys. They finally put in an appearance on the court docket, so we know for sure it's been confirmed now that Mark Cohen of Cohen & Gresser will be one of his attorneys. And, of course, Cohen is a former federal prosecutor who has also had some high-profile defendants in recent years, most recently Ghislaine Maxwell. So it's going to be, we're probably going to just hear a little bit more about the specific allegations and the specific arguments about what exactly Bankman-Fried has been accused of.
Mm-hmm.
And so go on, Chris.
Well, is he going to be held in Manhattan at all, or he'll continue with his bail conditions, which is home arrest at his parents' place in San Francisco?
So my understanding is it would be pretty unusual for the bail conditions to be changed at this point, unless there is actual evidence that Bankman-Fried has broken them. I know there was talk last week about the crypto moving out of Alameda's wallets. Bankman-Fried has said that he doesn't have any access to those wallets, and so it wasn't him. He does seem to have converted around, I think, $700 or $800 worth of Ether moved it from one wallet to another, but that is within his court-prescribed limits. So, right now I don't see anything that would result in the court changing his bail conditions or otherwise remanding him back to prison. The other thing that did happen today, though, is he has filed in a court a petition to have the 2 private parties that co-signed on his bail keep their names redacted, which is, I imagine, going to be another point of interest for, not just prosecutors, but the broader crypto community, right? Everyone, I think, in the industry wants to know who is helping secure Bankman-Fried's, at least current freedom.
Isn't that just his parents?
His actual trial. So his parents put up a house, but it seems that there were also 2 other private parties that also signed on to the bond and basically made assurances to the court that he would appear or they would help pay, whatever they ended up pledging.
And with the guilty plea, to be sure, guilty plea means that this is going to drag on for a while. And not guilty plea, rather, is going to mean this is going to drag on for a while.
Right. And, to be fair, there's nothing that says that Bankman-Fried has to stick to this plea. He could change it to a guilty plea later on. But if he sticks with his not guilty plea, we are going to see a trial. We're going to go through the entire, complex process of a federal prosecution. So we're going to probably see, for a case this high profile, I imagine we're going to have to see a jury. We're going to see, motions for summary judgment, I think. I know for civil cases, that's definitely a thing. I'm not sure how that works exactly on the criminal side. But it's going to be a, couple of years probably before we get to a full resolution. If we look at any of the civil cases or even past prosecutions as anything to go by, even if they expedite this, it's going to take a while just to get through all of the motions and all of the arguments and the whole jury deliberation.
All right, Nick. Well, thanks for the update. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. All right, Sam Bankman-Fried was a prominent backer of the cryptocurrency Solana, and the tokens are facing selling pressure as the disgraced founder of FTX faces charges of fraud and misappropriation of client funds. Joining us now to discuss is Solana Foundation Head of Strategy and Communications, Austin Federa. Austin, great to have you on the show. So we have seen the price of Solana fall in roughly 90% over the last 12 months. Now, Sam Bankman-Fried was a huge backer of Solana very early on, saying it had the best throughput, just a general cheerleader. What of his involvement in Solana is now having an impact on the community and development?
Yeah. It's interesting because if you look back at the history of Sam/FTX/Alameda, turns out they were all kind of just one thing. Their involvement in the network, they really came in sort of summer of 2020, about 4 months after mainnet beta had launched of the network. I think when that group showed up, they had every intention of building real technology and real software on the network. And some of the first projects that they were involved in was Serum, which was a central limit order book built on the Solana blockchain. And that's real technical innovation. Serum's shared liquidity model has become kind of a staple of the industry. Central limit order books are very hard to build on chain. Solana's got 2 very well functioning ones. Serum has been forked into something called OpenBook now, which is a community-run project over concerns, of course, of Sam and FTX's involvement in Serum. But at some point they pivoted from building real projects and real technology to something else, and I think we're finding out more details about that, what that thing else was now as things go. But I think it's also important to note that over the last 2 years they've put over $50 million into Polygon. They were major backers of Aptos and Sui as well, so they were involved in a number of different ecosystems.
Do you think that having a centralized exchange like this, or any major organization involved in any particular project, ended up hurting rather than helping? I mean, you brought up Serum, now OpenBook, and you brought up some of the benefits, but do you think that the benefits, that the costs may have outweighed the benefits to the community?
Look, Solana is a new blockchain architecture, right? It's built on it's not an EVM compatible chain. It's not built off of this legacy of an EVM code base. It's doing something new. And every time you're doing something new, it's hard to convince developers that that new thing is worth learning and building on. So, the engineers who used to work at FTX, they were exceptional engineers, set aside all of the sort of the business unit fraud. The engineering organization there was quite competent. And so, having that caliber of builder take a bet on Solana, 6 months after a mainnet launch and say, we're going to actually show up and learn a new language and program in Rust and learn a new runtime environment and build something as performant as a central limit order book, I think that's partially what put Solana on the map. Which, then at that point, it exists on its own merits. There's thousands of developers building applications on the network. Even today, there's about 1,200 different programs on chain that have transactions going through them every day. And it's if you look at the on-chain activity from the first day of the year, January 1st, it was had the most active addresses of any blockchain on that day. So I think what you've seen is real staying power for both users and developers to build on the network. And I think the initial attention that Sam brought was certainly helpful in the early days. Obviously, he's done huge damage to the industry and the network.
Mm-hmm. I will bring up a tweet from Vitalik Buterin, the co-founder of Ethereum. He tweeted recently that some smart people tell me there is an earnest, smart developer community in Solana. And now that the awful opportunistic money people have been washed out, the chain has a bright future. Hard for me to tell from outside, but I hope the community gets its fair chance to thrive. So how does the Solana community bounce back from this? Because there are quite a few projects that are leaving.
Yeah, I kind of love this tweet from Vitalik, because one of the things that we've said for a while is the Solana and Ethereum communities are very different from each other, but it's kind of two takes on a pretty similar idea, which is how do you build a global system capable of handling all of the world's information and transactions? And Ethereum is sort of like one alternate history, and Solana is another alternate history of kind of the same historical event, for lack of a better term. And I think really the vision of Solana as one global state machine that doesn't involve sharding, that is a fast environment where developers can build whatever they want, that vision is sticky, and projects are sticking around for it. You're not really seeing any projects migrate off of Solana that need the performance and power of the network. network. There's a lot of stuff that you can only build on Solana, and those developers are continuing to build here, right? This is the story of the central limit order book built on chain. This is Helium migrating to Solana. This is Ellipsis, which is a new cloud being developed. There's a lot of stuff that you can only build on a network that's performant, and there isn't another environment available for folks to build on.
The ones I'm thinking of, Solana's top NFT projects, DGods and Utes, they're migrating chains. DGods is going over to Ethereum, and Utes will be moving over to Polygon early next year. So there's certainly been some loss in that sense.
Yeah. I think NFT projects fall into a little bit of a different category, though, because they're not actually, an NFT project can pick a chain for a number of different reasons. But at the end of the day, they're not really sending many on-chain transactions. NFT projects typically are not using the capabilities of what a network is really designed for. They're existing there because of other questions like liquidity. I think there's no question that there's more liquidity available for NFT projects on Ethereum than there is on Solana. Solana's main advantage is the cost of minting an NFT is less than 12 cents. And that composability and interoperability means that you can launch projects that are much more accessible, that are onboarding platforms for more users. Because there aren't that gas fee constraint and there aren't the cost constraints of creating an NFT or trading an NFT, you just see a very different dynamic develop on the network.
So what you mentioned before, the differences in the cultures, differences in the communities between Solana and Ethereum. Now that this is all sort of like, there was that big washout, if you will, from a major backer. What are those differences now? And how do you see things progressing in the coming months and years?
Yeah, one of the things that I've been really just impressed at over the last 2 years are the caliber of developer that's building on Solana. What we're not seeing is we're not seeing a bunch of folks who have been building stuff on Ethereum say, I want to actually try and build something on Solana. I think folks who have put in the work to learn Solidity, like they understand what they're doing, they have a reason for being where they're building. What we're seeing is a lot of new developers coming over from Web 2, folks who used to be senior software engineers at Google or Apple or Amazon or Facebook or something like that. And they're deciding they want to build something on Web3, and the platform they're picking to build that on is Solana. Because the network has similar performance characteristics to Web2 services that they're used to in terms of throughput and speed and all this sort of thing. And there's a real paradigm shift in building for blockchain versus building for a Web2 company. And I think Solana offers a really compelling series of characteristics that make those developers excited to build on a network like Solana. Price moves for a myriad of reasons that no one can really predict. And if any of us could predict with certainty how prices would move, we would be in a different industry, probably on the trading side. But when you look at the core characteristics of Solana and its performance and scalability into the future, that's what developers are seeing, and that's what they're saying. Like, I'm going to take a bet that I'm going to build my project on a network that I know can scale into millions and millions of users and billions of users globally over the next few years. And that is really, I think, the attractiveness of Solana as a development platform.
Is there any concern around the market share that the FTX group and Sam Bankman-Fried, empire had in Solana, and that is contributing to why TVL is down and the price is down?
Yeah, I mean, if you go to solana.com/news, there's a whole fact sheet that the foundation put out there that discloses a bunch of information around what lockups were that FTX and Alameda held and all those sorts of things. But all of those funds are caught up in, a Chapter 11 process right now. So, I think that we're going to have to see what happens with all of that and what that kind of unwinding looks like. I think what we saw was a huge amount of market panic when this news initially hit. And what we've seen is that the users are still here and developers are still here, almost, we're almost 2 months past at this point, and on-chain activity's up. There's a community hackathon kicking off this week. There's a lot of really interesting work and development happening in the space, and devs are still building.
Was there a proportion, like a figure known of how much FTX and Alameda owned of Solana?
So all of the data is kind of available on chain there. In terms of the exact percentages, I don't have those off the top of my head here, partially because as...
Ballpark.
Got a ball.
I believe the numbers that have been done on the math is somewhere around 8%.
Okay. Meanwhile, there's also rising interest in Solana in the community for Bonk, which is a newly launched token themed around the Shiba Inu dog breed that said it would airdrop 50% of its token supply to users last week. So are we seeing a lot of what's been creating Ethereum, just coming over onto Solana?
Yeah, look, I think that it's a bear market of a bear market right now, and folks are just wanting to have some fun. And I think, setting everything else aside, like an airdrop token that's like dog themed is something that folks find really fun. And that thing came out of basically nowhere. It just showed up on Twitter one day and in everyone's wallet and sort of has taken off. So I think it's been really cool to see the community kind of come together and say, like, at the very least we can have some fun. And it turns out this dog coin is the fun thing of the moment.
All right. Well, a good way to start the new year. Austin, thanks so much for joining us. That was Solana Foundation Head and Strategy and Communications, Austin Federa.
Thanks for having me.
All right. Coming up, more analysis of Sam Bankman-Fried's upcoming court appearance and what it could mean for the VC sector after the break. Let's have a live look at Bitcoin. The CoinDesk Bitcoin price XVX index currently at $16,750, up about 0.5%. And the CoinDesk Ether price ETX index at 1217, also rising about 0.3%. And the DFX CoinDesk DeFi index in the green at 100, up about 0.4%. As FTX founder Sam Bankman-Fried awaits arraignment in Manhattan court today, what's on his mind? Our next guest has written a book on Bernie Madoff and is an expert on scandal and fraud. Joining us now is Champel Capital co-founder and managing partner Amir Weitmann. Amir, great to have you on the show this morning. Do you see similarities between Sam Bankman-Fried and Bernie Madoff?
Well, first of all, I think we should be careful. I mean, we don't know yet. He hasn't entered into a guilty plea. So, we live in a free and democratic state. And so long as somebody has been proven guilty, he's innocent. So first of all, I think we should remember that. Having said that, fraud is fraud. And you can look at the history of fraud, for thousands of years. And there are some common features to all frauds, and it's human gullibility. the belief that people are, that money comes for free, and that you're going to do some very simple action and become very wealthy, or get something which you're not expecting to get under normal circumstances. If I'm, talk about Bernie Madoff, at the time, he was not promising his investors incredible returns in terms of, how much it would be, but he would give good returns with zero volatility. Now, at the time, he was talking about maybe 10, 15% yearly. So essentially giving every month 1%, 1.5%, something like that to his clients, zero volatility. We all know there is no asset like that in the world. It doesn't really matter where you're going to be investing. There isn't such an asset like that. It just does not exist. So in that respect, if you're looking at Sam Bankman-Fried, so he was not exactly promising the same sort of stuff, but he was promising his investors that they are going to have incredible returns, and just, everything will be fine, and risk level is close to zero. We all know this is not serious. So in that respect, I think you can yeah. What do you
when one talks about investors, there are account holders, and then there are also the people who invested with Sam Bankman-Fried, and many of those were institutional, large institutions, the venture capitalists, etc., who put money with Sam Bankman-Fried. It seems like they didn't do their due diligence. I'm being, as a previous guest said, I was being very polite. It was beyond shocking how little due diligence was done. What are the similarities in that respect to what happened with Madoff in terms of how large institutions approached somebody like Sam Bankman, Bernie Madoff, and what was it about them that caused these institutions to say, do we really need to do all the extra work? I mean, those of us who have ever done due diligence on an investment know that if you have the right manager, or if you have a tough manager, it could take a long time before you put a penny into something. Yet it seemed they were very quick to do this. What happened?
Well, it's, actually, I had a whole chapter on this story at the time, and I think it has to do with, at the time, it had to do with the personality of Bernie Madoff, and it probably, I don't know Sam Bankman-Fried, but it probably has to do with his personality. In other words, what happens is that you kind of get somebody on board because you kind of impress him, and people say, you know what, this guy is a genius, let's do it, and they essentially don't do a due diligence. They're essentially misbehaving. There's some of these institutions are behaving properly. I mean, there's no other way to say it. But then what happens is that once the first guy has come in, then the second guy says, oh, the first guy invested, so that probably means that it's okay, right? Otherwise, he wouldn't have invested. And then he puts the money, and then the third and the fourth and the fifth. And the more people like that enter the fray, then the worse it becomes, because it kinds of, once you have, 5 large investors and reputable investors in the cap table of the company, then of course it's good, right? And we in Champel Capital, we invest in a tremendous amount of time and energy and money to do our due diligence, which doesn't mean, by the way, that we're always right, but we really try our best, and I would expect and hope that everybody does the same. But unfortunately, experience has taught us that this is not always the case. And then you have, in some cases, again, people who are just going to invest in something because it looks good, because it's trendy. And I can tell you, I mean, over the past 2 years, we have not invested a dime in anything which has remotely close to crypto, because generally my personal view is that once when there's a buzzword, you should be careful, because buzzwords bring with them bad money, bad investors. So you hear AI. I mean, all our companies now have AI, but back a few years ago, I heard AI. I said, okay, that's enough for me. I'm not investing. There was at some point there was a buzz around cannabis. Didn't invest. There was a buzz around crypto. You don't invest because typically you're going to see a curve of investors where everybody throws money, and so it's boom and bust, right? So you're gonna have and then afterwards,
full of buzzwords.
Right. Yeah, but you have to be careful because generally it ends in financial disaster. So after the bust happens, you have to see who remains, and then that's the right time to actually consider it doing an investment. And now, for instance, that's something I'm not sure. I was listening to your previous interviewee, and when is the bottom? I don't know when is the bottom, but it's clear that now we are in a better position to invest than we were maybe a year or two ago, right? Because a lot of this crazy speculation is out of the way, and now that sense is slowly coming back to people. Now we can look at interesting projects where there is real value, and I'm sure there will be some of those projects will have value, but probably now is the right time to look at them.
I also want to mention some of the differences between Madoff and Sam Bankman-Fried. I mean, Sam Bankman-Fried has said himself that, he believes he actually had a business and Madoff did not. He's also going to plead reportedly not guilty, according to sources, whereas Madoff pled guilty. So going down these lines, I was wondering if you could actually weigh in on sentencing, because Madoff got put in jail for quite 150 years. Wow.
150 years, and he didn't live to spend the 150 years in jail.
Yeah,
usually the case.
Sam faces about just over 100, like 115 or so.
He's a bit younger.
Do you think he's a bit younger? Is there? Do you see? I don't know, any similarities or could you weigh in on sentencing in that regard?
Frankly, I'm not a legal expert at all, and certainly not in terms of the criminal system in the U.S. But if it can be proven to have acted, with malicious intent, I would guess that he's going to spend a long time in jail. It's going to be very, very painful and unfortunate for him because he's a young fellow. He shouldn't have put himself in such a situation. But unfortunately, once you essentially, I don't know if stealing is the right word, but if you create a situation where there are losses of hundreds of millions and then billions of dollars because you misbehave, this is going to have serious consequences. I don't see any other way of putting it in any other way. It's going to be hurt. It's going to hurt. I mean, he needs to have.
All right.
I don't know. I wouldn't want to be in his place now. Sorry.
Amir, thank you so much for weighing in. That was Champel Capital co-founder and managing partner, Amir Weitmann.
Thank you.
All right, that's it for First Mover. Thank you, Lawrence, for joining me. I'm your host, Christine Lee. And folks, don't miss CoinDesk TV at CES in Las Vegas this week from January 5th through the 8th. We'll have live special programming with some of the biggest companies jumping into Web3. Also, happy birthday, Bitcoin. It's the anniversary of Bitcoin's Genesis block today. Meantime, check out the hash at noon Eastern with Zach. We've got Will, Jen Sanasi, and Wendy O also. We've got all that Bitcoin at 3 o'clock with yours truly. You're watching CoinDesk TV.